Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on a Wednesday, June 21st, 2023. And welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have a contest, so let's talk about that. All you have to do to enter is have a US mailing address and comment on the May 2023 covers video. It's as simple as that. Then you're going to be entered to win a hardware wallet. So go, comment on the video, and secure your chance to win the drawing at the beginning of July. Our first story tonight takes us to the world of crypto exchanges, where one major player is shifting its focus to the Asia-Pacific region. Binance, the world's leading crypto exchange by trading volume, is making strategic moves amidst regulatory challenges in the West, because they recently launched a regulated digital asset platform in Kazakhstan. This move comes at a time when regulatory pressures are causing many crypto platforms to shift their attention to the Asia-Pacific region. This new platform was announced at a press event on June 20th, 2023. Attended by representatives of Kazakhstan's banking industry and Binance Kazakhstan's leadership. Binance previously received preliminary approval to operate in Kazakhstan in August. They were granted a permanent license to offer a digital asset platform and provide custodial services at the Astana International Financial Center, or AIFC. The AIFC Financial Services Authority signed off on the license back in October. The new platform will provide a range of crypto and fiat-focused services for users in Kazakhstan. These services include exchange and conversion services, deposit and withdrawal of fiat, and the custody of crypto assets. Kazakhstan's Freedom Finance Bank will provide the banking services. This will enable users of the digital asset exchange to transfer fiat funds to their accounts on the platform. Currently, there are 2 fiat channels available for deposit and withdrawals: bank cards and bank transfers via Freedom Finance Bank. This latest move by Binance is happening while the company faces increasing regulatory issues in the United States as well as several European countries. Binance is currently involved in a lawsuit with the US SEC as well as a lawsuit with the CFTC. Now, in addition to its troubles in the US, Binance is also experiencing regulatory pushback from several European countries. Reports indicate that the exchange has been under investigation in France since early 2022 on charges of aggravated money laundering. Binance also applied to wind down its services in the United Kingdom and Cyprus. Despite these challenges, Binance stated that its recent exit from several European countries was part of its strategy to comply with the EU's markets in crypto assets regulations. However, there are reports suggesting that European regulators are collaborating with the SEC on the Binance investigation. And to be sure, Binance is not the only global crypto exchange looking to the Asian market in the face of growing regulatory uncertainty in the US and Europe. Gemini announced plans to focus on the Asia-Pacific region by increasing its staff at its Singapore division and establishing an engineering division in India. With Hong Kong emerging as a growing crypto hub, many crypto platforms are considering their plans to enter the country, with legislators in the nation already inviting companies like Coinbase to establish their offices. Now, as far as the Netherlands goes, the Dutch Central Bank has not disclosed the specifics of Binance's registration failings due to confidentiality requirements of its supervisory laws. On June 16th, Binance announced that it would immediately cease its services in the Netherlands after failing to secure approval from the DNB, that's the Dutch Central Bank. Now, Dutch customers will only have the ability to withdraw assets from the platform, as trading and deposits were halted on the day of the announcement. Binance had gone through an extensive registration application process to secure a virtual asset service provider license in the Netherlands. The company also explored other ways to serve Dutch residents. Despite this setback, Binance indicated that it would persist in its efforts to gain authorization to offer its services and products in the country. The DNB's press officer for supervision, fintech, cryptocurrencies, resolution, and payment systems was pressed for more information on Binance's failed registration efforts. However, he stated that the central bank could not provide further details about Binance's registration due to the legal requirements of their supervisory laws. He emphasized that the DNB's silence on this specific supervisory outcome and similar issues should not be misinterpreted as an unwillingness to comment, but rather as a necessity imposed by Dutch law. If Binance had succeeded, it would have joined a list of 35 VASPs registered with the DNB, including Coinbase Custody International, Coinbase Europe, eToro Europe, BitPay, and Bitstamp. VASP registration requirements in the Netherlands are aligned with similar requirements for other financial institutions under the DNB's supervision based on the Netherlands Anti-Money Laundering and Anti-Terrorist Financing Act. Implementing the EU's recently published Markets in Crypto Assets regulation could offer Binance another way to operate in the Netherlands by 2024. If Binance meets the necessary requirements in the other EU member states, it could gain access to the Dutch market. However, the specifics of how MiCA will be implemented in the Netherlands are still unclear. Binance has already started to increase its efforts to comply with the new EU rules set out in MiCA. In July 2022, the DNB fined Binance $3.6 million for operating without clearance in the Netherlands. In contrast, Coinbase did receive approval from the DNB in September of 2022 as it began to explore expansion outside the US and into Europe. Coinbase is currently involved in a significant legal dispute with the US SEC over allegations that it had been operating as an unregistered security exchange broker and clearing agency. Our next story takes us to the US, where multiple enforcement agencies are joining forces to tackle crypto-related crimes. Let's find out more about this collaborative effort. In the US, 5 enforcement agencies have officially joined forces to tackle crimes related to the digital currencies and Darknet. This collaboration, now known as the Darknet Marketplace and Digital Currency Crimes Task Force, was announced on June 20th. This task force aims to combat cryptocurrency-enabled crimes such as drug trafficking, money laundering, theft of personal information, and child exploitation. The agencies involved in the task force include Homeland Security Investigations Arizona, the Office for U.S. Attorneys, the IRS Criminal Investigation Service, the DEA, and the Postal Inspection Service. These agencies have been working together since 2017. During that time, they've noticed an increase in the use of cryptocurrency. The mission of the Darknet Marketplace and Digital Currency Crimes Task Force is to disrupt and dismantle criminal organizations that exploit the anonymity of the Darknet or use digital currency to facilitate their criminal activities. Now, this is not the first time law enforcement agencies have formed specialized unit for crypto-related enforcement. Interpol created a crypto crimes unit last year, and police in Canadian cities have started forming local task forces. This new task force will have an international reach, as Homeland Security has 93 locations in 56 countries overseas. In the US, the FBI formed the Virtual Asset Exploitation Unit in February that will work with the Justice Department National Cryptocurrency Enforcement Team. The Securities Exchange Commission also expanded its cyber unit last year. The task force has a significant amount of work ahead. According to Chainalysis, over 4,000 crypto whales hold illegally obtained funds, and crypto phishing attacks increased by 40% last year. However, there are signs that law enforcement efforts are making a difference. The formation of the Darknet Marketplace and Digital Currency Crimes Task Force is a significant step in the fight against cryptocurrency-enabled crimes. With the combined efforts of multiple U.S. enforcement agencies and the potential for international cooperation, the task force is well positioned to disrupt and dismantle criminal organizations that exploit digital currencies and the Darknet. Now, our next story takes us to Singapore, where the Monetary Authority of Singapore has proposed a new protocol called Purpose-Bound Money. This innovative approach aims to enhance the interoperability of CBDCs and stablecoins. Let's explore. The Monetary Authority of Singapore has put forward a new protocol known as Purpose-Bound Money for the interoperability of central bank digital currencies and stablecoins across various platforms. The proposal was made in a white paper that also detailed the conditions for using CBDCs, tokenized bank deposits, and stablecoins on distributed ledger technology. And this is a continuing theme, right? Just last night we had 2 stories so similar to each other I had to check my notes. And just like the BIS and the IMF stories last night, this is about bridging everything into one single ledger. The PBM concept introduced in the white paper allows the senders of digital money to set specific conditions. These conditions could include the validity periods of the digital money and even the types of shops where the money can be spent. Uh-oh. This innovative approach to digital money was developed in collaboration with the IMF, Banca d'Italia, Bank of Korea, and several other financial institutions and fintech firms. The collaboration aimed to outline businesses and operating models for programmable money transfers. Sopnedu Mohanty is the Chief FinTech Officer at the Monetary Authority. He said that this collaboration has led to significant advancements in settlement efficiency, merchant acquisition, and user experience with digital money. He further emphasized that these developments have improved the prospects of digital money becoming a vital component of the future financial and payments landscape. The PBM system allows users to access digital money through their preferred wallet provider. It supports multiple use cases, thereby promoting interoperability. Several companies, including Amazon and Grab, are piloting the use of the PBM protocol for online retail payments. In that context, the protocol aims to provide more assurance to both buyers and sellers. It ensures that the payment is only released to the merchant when the customer has received the items that they paid for. Other companies are testing BBM-based cashback and other incentives to enhance customer experiences and reduce merchant friction. The PBM white paper builds on Project Orchid and encourages more research among central banks, financial institutions, and fintechs. The goal is to understand the design considerations in the use of digital money. As part of the effort to support ongoing development and learning, the PBM source codes and software prototypes have been made publicly accessible. Our next story takes us back to Europe, where the European Commission is reviving discussion on a digital euro. This move comes after the topic was previously taken off the agenda. Let's find out more about the potential legislation and its implications. The European Commission is the executive branch of the European Union. The EC is set to release legislation concerning a digital euro on June 28th. This comes after the topic, which has been contentious, was previously taken off the agenda. Mairead McGuinness is the Commissioner of the European Commission. She confirmed that she will be moving forward with a bill that will support a central bank digital currency. This bill is expected to address various issues such as privacy, distribution, and online transactions. McGuinness expressed her anticipation for the presentation of the proposals for the digital euro and a concurrent law on the legal status of cash. The plans for the CDBC have sparked concerns. Some fear that it could lead to government surveillance, while others worry that it could replace banknotes and coins. Reportedly, the topic was taken off the agenda after internal discussions earlier in the week. It was also removed from a preliminary agenda that the Commission published earlier on Tuesday. The European Central Bank will make a decision later on in the year on whether to proceed with the project. The ECB has been examining the technical details of the project for several years. Now, before we conclude tonight, let's touch upon the regulatory landscape in the US and how it may impact the crypto industry. Berenberg, an investment bank, predicts the SEC's next move. Let's find out what their research suggests. And this is our cover story for tonight. The SEC is likely to focus its regulatory efforts on stablecoins and decentralized finance. This prediction comes to us from a recent research report by Berenberg. The investment bank suggests the SEC's ongoing crackdown on the crypto industry could soon extend to these areas. Stablecoins, like Tether and USDC, as well as DeFi protocols, may be brought into regulatory compliance. This comes in the wake of the SEC's recent legal actions against Binance and Coinbase for alleged violations of federal securities laws. The SEC's potential focus on stablecoins could be part of a strategy to limit the growth of unregulated DeFi protocols. Their concern is that these protocols could serve as alternatives to regulated lenders and exchanges. The analysts, led by Mark Palmer, suggest the SEC could, quote, target the stablecoins that serve as the lifeblood for decentralized finance. This could also have the effect of weakening the DeFi ecosystem. The report also highlights the potential impact on Coinbase if U.S. regulators target USDC. In the first quarter of 2023, Coinbase generated $199 million in net revenue. Now, about 27% of that came from interest income on USDC reserves. If USDC comes under regulatory scrutiny, this could affect Coinbase's revenue. The SEC has previously reported that Bitcoin is a commodity and not an unregistered security. As a result, Bitcoin could emerge as the main beneficiary of a regulatory environment that is more focused on other aspects of the crypto industry. The report also mentions MicroStrategy, a company well known for acquiring and hodling Bitcoin. It suggests that MicroStrategy's shares are well positioned to outperform in the market. This is because the regulatory clampdown is likely to result in a U.S. crypto industry that is more focused on Bitcoin than it has been in previous years. So, what happened? Tonight, we explored a range of stories that shed light on the evolving landscape of crypto. As regulatory challenges mount in the US and Europe, Binance has launched a regulated digital asset platform in Kazakhstan, tapping into the growing crypto market in the Asia-Pacific region. In the US, 5 enforcement agencies have formed the Darknet Marketplace and Digital Currency Crimes Task Force to tackle cryptocurrency-enabled crimes, such as drug trafficking and money laundering. This collaboration signifies a united effort to disrupt criminal organizations exploiting digital currencies. The Monetary Authority of Singapore has proposed purpose-bound money. This would be a protocol that enhances the interoperability of central bank digital currencies and stablecoins. PBM allows for specific conditions to be set, promoting trust and security in digital transactions. After being taken off the agenda, the European Commission is set to release legislation concerning a digital euro. This move aims to support the development of a CDBC and address concerns around privacy, distribution, and the future of physical currency. Berenberg's research suggests the SEC is likely to focus its regulatory efforts on stablecoins and DeFi. This potential shift could impact major stablecoins and DeFi protocols, with Bitcoin potentially benefiting from the regulatory focus. Overall, we highlighted the challenges and opportunities the crypto industry faces. Major exchanges like Binance are navigating regulatory issues by shifting their focus to new markets, such as Asia. Law enforcement agencies are uniting their efforts to combat crypto-related crimes, aiming to disrupt criminal networks that exploit digital currencies. Governments and financial institutions, as seen in Singapore and Europe, are exploring the development of central bank digital currencies and protocols to enhance the usability and security of digital transactions. Meanwhile, the SEC's potential regulatory focus on stablecoin and DeFi reflects their ongoing efforts to bring these areas into compliance. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I'll stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.